Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
When an impulse wave is correcting, what kind of tool do you use to gauge the strength or weakness of that correction? I won't get into that. I'm sorry. It's just kind of a technical thing. I mean, you just look at some of the oscillators. Obviously, retracement levels using Fibonacci, things like that is what we look at. In terms of correction, your basic trend lines, a lot of things that we would put up on it. What is this thing about China accumulating commodities? China has a very big need for commodities given the growth that they have, obviously, and they were stockpiling commodities in a very big way 3 to 6 months ago instead of using their money for other things because they have plenty of it, and they were thinking they were buying commodities at low prices, and they were, so they were buying cheap, so they were starting to stockpile. They found, though, that they ended up driving the prices up on themselves. So they haven't been stockpiling, if that's the word accumulating means in commodities. But they have such a voracious demand for commodities. They have so many people, and they have so much now infrastructure and capacity. They have a constant need for energy, so they're constantly going around the world, staking claims and energy assets all over the world wherever they can in a very big way. I think we have about 3 more minutes. The Baltic Dry Index, can day traders incorporate this? I think that's a tough one because the Baltic Dry Index has been bouncing all around, and sometimes it technically moves on some other factors inside the index. I don't think it can be a day trading tool. How far out do the ISE options go? I think it's 10 months is as farthest out they go in the ISE options. Are these options liquid? Well, it depends on how you define that. The markets are made, and they have specialists that make markets in them. Are they liquid? No, some of them aren't liquid. Some of those, the euro is going to be fairly liquid. Canadian dollar is liquid in there, but in general, they're not. How you get around that is you use limit prices. I would say if you're going to trade these options, try and always use a limit price. Force the specialist to come to your price. Don't give them a market order. We don't want to let the specialist send his kids to college on market orders is what specialists usually do, in my opinion. So we want to give limit prices and don't let them stick it to you. That's the way you should play this game. I know people say, no, you should have been marketing, you're going to lose it. Well, yeah, not really. There's other good opportunities that come around. So I see always use limit prices in these markets. If you have to get out for a reason, sometimes you're forced to, you're forced to maybe get out at market, but use limits wherever you can, getting in and getting out of these markets. Question, do you believe the U.S. can recover from the massive level of quantitative easing? This money has to be repaid over time, and surely it'll bring a big burden on the U.S. economy. It will absolutely provide a burden in the U.S. economy. The U.S. economy can recover from it, but this is a great point, and the point is that this burden that's being created means that the U.S. economy is probably going to grow much slower and much below capacity compared to what it could have without this massive level of public debt now thrown on us. So I would expect many years of below par growth for the U.S. economy because of this, and ultimately we'll work through it, but it should slow our growth for a while. People have talked about that lost decade like Japan, and that's a possibility, so it will definitely have an impact. That's a great point. Do you feel China will succeed in its plan to overtake the dollar as the trading currency, the world reserve currency? No, I don't. China's currency is not convertible. China has draconian capital controls. China's first worried about making sure that their people remain serfs, so they don't want to make their currency convertible and they probably won't for a long time. If there's no doubt the U.S. reserve as a reserve currency will decline probably as power shifts. But there are a lot of people out there that think China could become a non-entity by 2020, in the middle of 2020, maybe 15 years because of internal conflicts. I think this idea of China replacing the dollar is going to take a lot longer than most people believe, and they may never. So this is not something I would bet on, even though the newsletter writers love to use this as a scare tactic. I think that's about it. So thank you.
Thank you so much, Jack. On behalf of the ISC and everyone who was able to participate this afternoon, this was really fantastic, so we really appreciate it. And Jack's webinar will be available tomorrow through our WebEx recording. So just look out for the email that we're going to send out. And next week we have John Yeagerson from Learning Markets. He's going to be presenting, and we look forward to seeing you then. So any future webinars that you want to look up, just go to fxoptions.com/events. And thanks again, John, and thanks everyone, and have a nice evening.
Thanks, Elena. Thank you, everybody. Take care.
Okay. Take care. Bye.
Bye.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.